During the first few months of 2014, the U.S. apartment market logged what we called a surprisingly good performance, given the bad weather seen across most of the country. And as the calendar turned from Q1 to Q2, the weather improved, and did a momentum continue for the U.S. apartment market? That's what we're going to look at today. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons. He's Greg Willett. And Greg, looking at the numbers from Q2, how would you rate them? Bad, good, or somewhere in between?
I think I'm going to pick good plus as our adjective there. We've got some really strong numbers to talk about really across the board in every category. And I'm going to start with the most impressive of all, and that is the quarterly rent growth number. Effective rents for new leases across the top 100 metros jumped 1.9% during 2Q. That's the biggest quarterly upturn since 3Q of 2000, so we hit a 14-year high there. I don't want to oversell that story since 2Q normally is the best quarterly rent growth period throughout the year, and the 2Q 2014 numbers aren't really that much bigger than the levels of 1.2% to 1.8% that we saw during that same time period during the past 4 years, but it is a stellar result given where we are in the cycle. We're adding a whole lot more new product now than we were back in 2010 to 2013, and it's usually tougher to sustain that big rent growth when we have a whole bunch of new units that are moving through initial lease up. Now, these quarterly rent growth numbers are pretty terrific looking across the board throughout the product spectrum and really in all but a handful of individual metros. Let's talk about the individual metros a little bit. The leaderboard tends to be the markets that we've talked about in the past with really strong results on the West Coast and particularly the Pacific Northwest, and then also in the Texas markets. But we also have some comeback stories. And Jay, you talked about the top of the discussion, some bad weather in late 2013 to early 2014. That really slowed down the rent growth results in the Midwest and the Northeast to Mid-Atlantic region. But we got some really good comebacks in rent growth for the quarter in those regions, and particularly Chicago did incredibly well in 2Q. The Boston numbers were really good, and even D.C., which we certainly have been beating up on, had a good rent growth number specifically for 2Q.
Let's move from Q2 to the year-over-year numbers for new lease change. And for as of Q2, annual rent growth measured 3.5%. And again, there's some momentum there. That's up from 2.9% in Q4 and 3.2% in Q1. So now up to 3.5%. And as Greg mentioned with the quarterly rent growth analysis, what's really impressive is that this momentum is coming even as the U.S. apartment market continues to see a big pickup in new supply. So the fact that we're seeing this kind of rent growth at the same time supply is picking up is a very good sign.
And with those really encouraging rent growth numbers, that means the occupancy numbers have to look pretty strong as well. So talk us through that story.
Let's take a look at those numbers. Q2 occupancy came in at 95.6%. That was up 60 basis points on a quarterly basis and up 30 basis points year over year, certainly above expectations. There are a couple significant storylines in looking at the occupancy numbers in a little more depth. The first is the upturn in occupancy for the existing apartment stock. So we've been telling you for a while that the U.S. apartment market is basically full with not much room to improve. But really what drove that are the early and mid-recovery markets. And what we're seeing now is the growth has been triggered in the late recovery markets that have been that were hit the hardest during the recession, took the longest to come back. And those are some places like Atlanta, Jacksonville, Sacramento, Riverside, and even Las Vegas. And the second storyline that's very important to talk about is what's happening with new deliveries. They're leasing up about as quickly as you could expect and about as fast as they could be built in a lot of places. And so properties in initial lease up just aren't much of a drag on apartment occupancy as we would have expected.
So Jay, let's fill in some details there on how we got to those occupancy numbers. Let's look at the supply-demand story out there. For the top 100 markets across the country, in 2Q, we absorbed a pretty stellar 129,162 units, and that's well more than double the completion figure, which was 55,561 units. For the year ending 2Q, we absorbed 219,812 units, and that is just ahead of completions that tallied at 203,912 units. One more key stat for you. Let's look at the volume of product that is under construction. At the end of 2Q, we have 383,186 units on the way. That ongoing construction number has been running at 350,000 to 400,000 units for quite a while now. We're really every quarter starting about as much as we're completing. So basically steady on the construction front. And that might be a little bit of a surprise if you've been looking at multifamily permit numbers, which have been continuing to trend up a little bit. But really behind that upward trend, we're starting a few condos at this point. And a little bit earlier, we didn't have any of those under construction. So that's really driving the overall lift in those permit numbers. So these are really good results, but the question is, how are we going to do in the near-term future? Can we sustain that? So, Jay, walk us through what's the immediate outlook.
Well, Greg, as you mentioned, Q2 is the typical peak for the U.S. apartment market, and it's going to be really tough, probably impossible to repeat the kind of numbers we saw in Q2. But Q3 is also typically a very good period for the U.S. apartment market. Not quite as good as Q2, but still very good. And so barring some unforeseen economic collapse, we expect the Q3 numbers to continue to show some momentum, building on what we saw in Q2. But as we get into Q4, this is a period where we typically begin to see the apartment market back off, and this year in particular, we have a lot of new units completing at the end of the year, and then you combine that with a period where demand is typically weaker, and we're going to give back some of the gains we had earlier in the year.
Yeah, I mean, certainly fourth quarter is the question mark there.
Absolutely. Now, for 2014 overall, though, what we've seen in Q1 and Q2, and we expect to see in Q3, we're above where we thought we would be at this point in the year, and we think at the end of the year, 2014 revenue growth will exceed initial expectations, not only from us, but really across the industry.
Everybody, yeah. It's been much stronger than anticipated.
So we'll get into a lot more of that as we get into future episodes of Apartment Market Dynamics. One of the next things we'll be hitting on is looking at the current rent growth leaderboard, always a popular list to look at. But until then, for Greg Willett, I'm Jay Parsons. Thank you for watching Apartment Market Dynamics.
Want more? Go deeper with NPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, NPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.